Hey everyone! This week I've been working on getting used to my new drawing tablet that I bought on Friday. It's amazing. It's a Kamvas 16 2021, and I've been using it to not only take on notes with, as you can see, but also work on some practicing my pixel art because I want to make our game an amazing, fun game. So let me show you a few of the pixel art things that I've been working on before we continue with looking over some of the notes, because I have not been writing dialogue this week and not even really much of last week, just because I think I've said before, but I've got deadlines coming up and I need to make sure that I can pass the test. But once I pass the test, then I can, well, I have 2 more classes, but I'll probably have a lot more free time with my next 2 classes, and in the time between terms, I'm going to really work hard on getting some content done. In the meantime, to avoid burnout, I haven't really been doing too much of that, but I have been working on art because my therapist says that art is okay and it's not going to help contribute to my burnout. She's just like, well, she didn't necessarily say that, but she said she doesn't want to reject art as something I can do in my free time, so I'm choosing to do that. Anyways, this is something that I made before I got my drawing tablet, and I just wanted to share it because I thought it was really cool. It could be some sort of boss raccoon. And the original raccoon that I made was this one, and the tail was all like kind of wonky, and I was just like, actually it kind of looks like he's doing a handstand. And I definitely needed more practice, and then after some, like last week when we went over this, I made this one, which turned out looking a lot better, but I realized that these ones look a little too feral, that I wanted my sentient raccoons to be bipedal. So I started making more raccoons, and I've got these ones, which I think the arms look a little silly. It looks like he's like about to go and punch you in the face or something. And I really like this one. He looks like a wise old raccoon. And this one I think is the cutest one. I worked with like doing no outline and with some outline, and I know that it was recommended by a person in the art forum for me to do no outline, but then I noticed that RPG Maker games, their assets mostly have a black outline, and that's so that when you have them against the background tile sets, they don't kind of blend in, that you can see the character. So I'm gonna work with that. My favorite, oh, there's that again. I'm gonna try really hard not to do that. I'm still really bad at side views, and I have to work on that a lot. And the way to resolve this was where I tried to actually make some over these pre-made human tile sets that I got from the asset generator folder. And so I'm like, if I can draw it over this, then I might be able to do it more. Haven't had time to really work with it, but I think they are looking good so far. Again, I haven't even tried doing the side yet. I didn't get around to it, but my favorite raccoon is this pink and black one. I'd love to make that the main character. I also know that not everyone's favorite color is pink, and my player base is going to be a mix of boys and girls, well, men and women. So pink and black probably isn't going to be much player friendly, as well as the fact that it's not too... I focused way too hard on the raccoons. The raccoons aren't going to be the super player facing asset, because it's mostly going to be the human AI, not AI, but the human golem body that people are going to see, and the raccoon is just going to be there for the beginning when you do the intro, and then scenes where you jump out of the golem in the bathroom and you do your mini quizzes. And I think I'm going to have my fairy scenes be as a raccoon. I'm not quite sure yet, but I think I want to have the fairies be able to know that they're a raccoon and just kind of keep it a secret. I think that might be a cute little, like, you get to have some gameplay as the raccoon and just like make it a little bit more novel. And then, yeah, like I said, most of the time I'm just spending time studying so that I can pass my test. I've got until I'm trying to keep really hard track. I've got 8 lessons left. I've got 11 weeks left of the term, and I've got this and 2 other classes left to finish. The other 2 classes I'm told, well, and with my research, I should allot about 6 weeks for, so that gives me about 5 weeks left with 8 lessons. And I wrote 8 lessons, but I'm gonna actually have to go back over the liability content because I really don't feel like I retained it. I think since I've had to take a step back from, take a step back from writing dialogue, my retention hasn't been as high, but unfortunately I do have to figure out some speed to make sure. I'm sure if I ended up having some extra time at the end, then I will go back and work on dialogue and help retention that way. Until then, this is the lesson I've been working on. I'm working on stockholders equity, the module, and this whole section of notes here is for lesson 25, which is reacquisition of shares, and it's all about stock, outstanding stock, and whatnot. And so for the remainder of the video, I'll probably just go over some of this with you guys. It'll help me remember my notes, and maybe it'll help you if you're trying to study intermediate accounting too. Or not, you can just skip to the end of the video where I say, hey, have a nice day. Usually people don't get that far, but if you want to, it's there. Okay, well, this is my reacquisition of stock lesson, and I like to break it up. Each bold blue ends up being a new note. And we've got corporations buy outstanding stock for lots of reasons. It's tax efficient, it increases earnings per share, it provides stock for employee compensation and merger needs, it thwarts takeover attempts by reducing the amount of stockholders, it makes a market, creates demand because there's less people that have the stock, so wanting more stock means you feel like you own more of the stock, I guess. Don't quote me. Recent tax law changes have diminished the advantage of tax efficiency for selling back to shareholders. It was about half the ordinary tax rate, which is a huge boost. The textbook did not elaborate on what tax law changes have diminished it. Probably doesn't matter too much since this textbook is giving examples from 2020, so who knows how much outdated information. It tends to worry me a little bit. That's why I want to finish the game so fast. I don't want it to get outdated. Alright, some companies eliminate outside ownership, obviously. That's what this kind of went over. It's called, they'll buy entire outstanding stock purchases through borrowing and to finance their stock repurchase. It's called a leveraged buyout because they want to go private. They don't want public ownership anymore. And then afterwards, they'll probably retire it or they'll reissue it in treasury stock. And treasury stock is known as the corporation's own stock. It's issued, paid in full, it's reacquired. It is not an asset. It actually reduces net assets and stockholders' equity. It's because it's like you're buying something back and it becomes part of the company. But if it's become part of the company, it's not like a valuable stock anymore. It's not on the market. People aren't going to buy it. So it's got no value to other people. So why would you increase the value of your company if you can't bring that value to other people? That's kind of what it's all about. It's your assets are how much value you have as a company. So if you sell a company, your stock, like entirely sell a company, then that stock ownership, it gets like released to them, doesn't it? So there's not going to be like the same stocks, the same stockholders. It's all going to be kind of reduced. Now, I'm just kind of thinking out loud here, to be honest. That's what my take is on it. I actually don't really know, but it sounds right. It's what makes sense to me in my head, and maybe in the later lessons I'll learn more about it. I'm not in, I mean, this isn't a finance class either. It's an accounting class, so I think this is more about how to account for treasury stock. So yeah, again, it does not an asset. It reduces net assets and stockholders' equity because it's essentially the same as unissued capital stock. It's not available for public purchase. They cannot get dividends. Nobody gets dividends from it. You're just reincorporating it back into your business. It's just, there's no rights, no benefits, nothing. You just get essentially less control for other people is what you're getting. And then we've got the purchase of treasury stock. There's two accepted methods. One is the cost method, which is used for more, and the par stated value method. Names are really self-explanatory. The cost method is because you debit it as reacquisition cost, and the par value method is recorded at par value. So that's very similar. I mean, very self-explanatory. You report the cost method as a deduction to total paid in capital and retained earnings on the balance sheet. And then when it's reissued, you credit those accounts for the same cost. It is the reacquisition cost, not the original price that we're looking at, because there is no more original price, is there? You've just got your reacquisition cost. It's like they become new, reborn. All right, the par value records all the transactions in the treasury shares, again at par value, and reports it as a deduction from capital stock only. It doesn't do a deduction from paid in capital and retained earnings. It does capital stock only with the par value method. And most states consider the cost of treasury shares acquired as a restriction on retained earnings. I have an example here, but I took it from the book, so I'm not really going to read it out loud. And I'm just going to kind of skim to my next spot. We've got, the example, essentially you're subtracting the cost of the T stock from the total of the common stock and additional paid in capital and retained earnings, so it reduces stockholders' equity. Many states, it always says many states. When you take your CPA exam, you're going to take it for the specific state you live in, which is why this is like many states require, because it's not always. It depends on the state you live in. You'll learn it for the state you live in when you take that exam, so it's just like the majority rule essentially until you learn the differences. They restrict retained earnings for the cost of the treasury stock purchased in most states, or a lot of states. They keep the temporarily held treasury stock as a temporary, it's like to keep it intact. We know it's there, we know it exists. It's not completely actually reintegrated because it's probably going to get sold again unless you retire it. Then it's completely reintegrated. But when it's sold, the restriction is lifted, and then it goes on to tell you what the term means. Outstanding stock is how much the stockholders own, the number of shares, and then that you find that by knowing the difference between shares issued and shares in the treasury. So shares issued minus shares in the treasury equals outstanding. So shares issued, that's how much other people might buy, but haven't bought yet. You've got the treasury, which is like our capital stock, the stuff that's inside our business. And then we've got our number outstanding, which is how much ownership, how many people bought some of those issued stock that isn't owned by the company to retire or to send back out, and it's just owned by the shareholders. All right, then we've got the treasury, the sale of treasury stock. When you sell it and you don't retire it, it's because it's usually retired or it's reissued. And when you account for the sale, you look at the price. If the sell price is the same as the cost, then you'll just record it as a debit to cash and a credit to treasury stock. Now, if you know your basic debits and credits, you know and my favorite anagram, I learned it from Tony Bell. He's got a cool YouTube channel. Anyways, you know the anagram, which is dead curls, which is debit, expense, assets, dividends, credit, revenues, liabilities, and shareholders' equity. Now, let me cross that out so I don't leave that in there. Now, so debit, expenses, assets, dividends, credit, revenues, liabilities, and shareholders' equity. Now, when you get more into the expanded version of accounting, you start to learn these subclasses like cash, which is assets, and treasury stock, which is shareholders' equity. And we know, and that anagram stands for when they go up. So if we sell our stock, then we're getting cash, and then we're getting less treasury stock, right? Oops. We're getting less treasury stock. And so we're debiting cash, which is, when cash goes up, it's an asset going up. It's debit, expenses, assets, dividends. It's going to be debited. And then we're crediting treasury stock. We've got, credit, revenue, liability, shareholders' equity. Treasury stock is going up as well because it's being reissued. We've made money. Now it's got more value. I don't know if I explained that right. I'm not very good at multitasking. I apologize. So if I'm explaining something, I might get a few things wrong, but trust me, when I'm doing my stuff on here, I double check all my work beforehand, and it will be accurate. If I do get something right here, I am still in the class, still learning, and it is really important to me to make sure that my answers are all right, but yeah, even professors get their stuff wrong sometimes. So, alright, if sale price of this T stock is not equal to cost, then it's important when the difference is higher or lower, because the accounting is different. But the sale always increases total assets and shareholders' equity. Why? Because you're always going to get cash, and then you have shareholders' equity going up because people now have bought stock. And remember how when we were talking about when we repurchase treasury stocks, like we repurchase stocks back into the company, we don't increase assets because it's essentially reincorporating it. We deduct net assets even because we don't have any more value brought into the company that we can bring to someone else. But now that we've sold it, that restriction is gone. Now we've gotten more cash, and we have gotten more value to other people, and that value is in ownership. And shareholders' equity is all about other people's the ownership from the people, the shareholders. And that is because they bought the stock, it's going up. They gave us cash is going up. I hope that was explanatory to you. All right. And then I wrote an example here where it's kind of chaotic, but this is when you are at above cost. And there was an example, I changed the example so that I could show it to you. It was there was 6,000 shares acquired at $10 a share, And then there were 2,000 shares sold at $12 on May 16th. And here, I'll draw with a highlighter to kind of show you what's going on here. So yeah, when you're above cost, you credit the difference to paid in capital from treasury stock. That's the most important thing to know. So I'm gonna definitely highlight that, and then let's do a little blue. Okay, so here's the example. We do cash because cash is going up, right? And then we do the cash. The cash is the number of shares you sold times the amount you sold it for, right? And that's going to be $24,000 because it's going to be $2,000 times 12, which is $24,000. And then we've got, let's do green now, the treasury stock. Treasury stock is, we've got the original cost now, the price that we paid, the price we paid as opposed to the price we sold it for, times the amount sold, right? And that's going to be, if I put that over here, it's going to probably be hard to read. So let's do a little bit of a different green. Kind of. Fine, it'll be a different color. Pink. Let's do pink. Alright. And then we've got the paid in capital, which was, of course, the difference between the two. The difference. And, alright, I'm going to write that in a different color. Let's do, I like rainbow. Difference becomes the paid in capital. That's the amount in excess that we got for selling those stocks for a higher amount. And then the next stage is for sale of stock below cost, which I'm gonna do in a new one. And it's gonna have to be a quick lesson because, well, actually, let's see, I'll just kind of explain it to you with some crappy notes. Alright, when it's below cost, let me make that more readable. When it's below cost, it debits the excess over the selling price to the paid in capital from the treasury stock. So if we sell, say, an additional, let's say 500 shares at $10 a share, then it'll be recorded at, we'll do, let's see, so it's 500, so cash will be 500 times 10, so it'll be 5,000 will be the cash account, and it'll be debited because we made money, right? And then the paid in capital from treasury stock, let's see, I think it's using the previous number here, so let's see, it was saying the original cost would be, yeah, I don't know where it's getting this number. Well, anyways, it was saying, the original example, it was talking about 1,000 shares, it was saying $8 per share, and it said debit cash 8,000, paid in capital was debited for 3,000, and treasury stock was credited for 11,000. And of course, the difference is what's the treasury stock when it's above, but it looks like when it's below, you actually add paid in capital and cash. And when I'm looking at the numbers here, 11, 10, 9, 8, it looks like from their example, the treasury stock amount originally So it was how much you bought the treasury stock for. So originally, not the selling price. So originally it was said that we acquired it for 11 at 1,000. So it was 11,000 that we bought it for. But because we sold it for less, then we're going to actually take that amount that we bought it for, which was 11,000, and we're going to deduct the amount of cash. So it would be treasury stock minus cash equals paid in capital, and then you get your treasury stock. I don't know. I'm just trying to explain before the video ends, but because yeah. Anyways, sorry guys. Thanks if you stayed for this long. You guys are the best, and thanks for coming to my channel and supporting my game, and hopefully we'll get lots of stuff done soon after deadlines. But yeah, I mean, check out Tony Bell if you really want to, if you're not actually in the class yet, if you want to learn a lot, if you want to know your debits and credits. He gives a lot of good examples. Anyways, and I hope you guys have a wonderful rest of your week, and I'll see you next week. Hopefully with more content than just lesson, but we'll see. I'm busy, but no worries. I will finish the game. People are like, oh, but why are you so not done with it yet? And I'm just like, well, do you actually know how long it takes to create all of the graphics, all of the dialogue? Plus, I have to learn accounting, and then as I'm learning it, I'm writing the dialogue. So it really is gonna take a lot of time. But I'm excited to share it with you guys someday, and I appreciate so much for joining me on my journey. Bye guys.